I think part of you is going to want to agree with my next statement, but you're not going to anyway, but I'll throw it at you, which is that my view of financial literacy would be teach people all those things and teach them that they should never be buying a stock, an individual stock, because they're probably going to get it wrong.
Well, I don't know that I would say never, but there is a big population out there that I agree with you on that shouldn't. And that's why we've done things like create exchange-traded funds or ETFs. It's also a reason why we created ETFs and then made them available to investors without commissions, because one of the things that we've always recommended for the smaller investor is dollar cost average. In other words, put a little bit of money away every week, every month, every quarter, and keep your costs really low, which ETFs can do. The challenge was, before we came out with the no commission concept, if I'm saving $50 a month and trying to buy 2 or 3 different ETFs to diversify, the commissions were eating me alive. And so I think for many investors, I agree with you completely. But let's not forget, there are investors out there who are real pros at developing a trading strategy or an investment strategy and actually have done quite well. And for them, buying individual stocks is part of that strategy, and for them probably makes sense.
So you mentioned there are many investors who probably shouldn't be buying individual stocks. Who are those people?
Well, I think there are people that don't necessarily have the experience in investing. Maybe their portfolios are more modest, and so they can't really create a diversified portfolio by buying 2, 3, 5, or even 10 individual stocks. Those people are much better served with a portfolio of maybe ETFs or mutual funds or index mutual funds, and maybe getting some professional advice.
And one last thing, for the average investor watching this, what is the difference between picking a basket of ETFs and simply investing in a mutual fund, other than being able to get in and out each day, which the average investor shouldn't be concerned about?
Well, I think what the ETF does is the ETF is very similar to an index mutual fund in most cases. But of course very different than an actively managed mutual fund where a professional manager is trying to pick which stocks are going to go up. I think if you compare the traditional ETF to the traditional index mutual fund, they're not really that different. There may be a little bit more transparency in the ETF than in the index mutual fund, and that may be a small advantage. But I wouldn't categorize either one as being a tremendously better investment than the other.